Ready to pass the CPA exam faster? Visit cpapass.ai. Today, where to look, auditing financial statement versus assertion procedures. Let's jump straight into a classic CPA exam question. Imagine you see this on test day. An auditor identifies that management receives large bonuses based on reported earnings. Which response is most appropriate? The options include assigning more experienced staff, increasing sample sizes for all accounts, or performing substantive procedures on every minor balance. This question tests your ability to distinguish between financial statement level risks and assertion level risks. Management's bonus structure creates a pervasive incentive that affects the entire set of financial statements. It is a financial statement level risk requiring an overall response, not an assertion specific one. Why is assigning experienced staff the correct answer? Because management's bonus incentive is a financial statement level risk. Think of this as the whole house risk. These are pervasive risks that potentially affect the entire set of financial statements rather than a single account. Examples include a lack of management integrity, a poorly designed accounting system, or going concern issues where a company might stretch the truth everywhere to avoid bankruptcy. These risks cast doubt on all numbers. To respond, we use overall responses, assigning experienced staff, increasing professional skepticism, and adding elements of unpredictability to our testing. Now let's look at our second practice question. When an auditor assesses a risk as high at the assertion level for revenue existence, which response is correct? The trap choices will offer general solutions like increasing overall professional skepticism. But assertion level risks are specific to individual rooms, particular account balances, transactions, or disclosures. This is where we focus on management's claims, like existence, completeness, and valuation. If we worry that revenue is overstated, we must alter the nature, timing, and extent of our specific procedures, such as performing detailed tests of details on sales transactions. Let's break down the difference between overall and specific responses to avoid the examiner's trap. Overall responses address financial statement level risks. They include staffing, supervision, and unpredictability. Specific responses address assertion level risks by altering the nature, timing, and extent, or net, of our procedures. For high assertion level risks, we perform more substantive testing, use larger sample sizes, and test closer to year end. These procedures include tests of controls, analytical procedures, and tests of details. Remember the risk response rule: higher risk equals harder work. We must directly link our procedures to the specific assessed risks. Here is our third exam question. If a company has exceptionally strong internal controls, can the auditor skip testing for management override of controls? Examiners want you to think strong controls make this test optional. That is a major trap. Testing for management override is always mandatory in every single audit, regardless of control strength, because override is a presumed significant risk. Other significant risks include revenue recognition fraud. For these red flags, you must perform substantive procedures specifically designed to address them. You can never rely solely on controls when a significant risk is present. To summarize, always assess risk at two levels: financial statement and assertion. Match financial statement risks with overall responses and assertion risks with specific alterations to your audit procedures. Remember, risk assessment is a continuous, ongoing process throughout the entire audit. If you discover new information, you must adapt. To master these concepts and practice realistic multiple choice questions and task-based simulations, head over to cpapass.ai. Practicing there will ensure you can spot these examiner traps instantly on exam day. Keep studying hard, stay focused, and you will pass this section of the CPA exam.